All right, what's going on today, everyone? Niconomics here. I want to show you my favorite personal strategy. It's going to be covered calls. This is a powerful strategy you can use to generate income on stock shares that you don't mind owning. I'll put a link to this slide in the description below if you want to follow along. Without further ado, let's just go right through this. So, covered call strategy, simple steps. Basically, you're going to own the stock. So you're going to have 100 shares of a stock that you want to hold. Let's say Tesla, right? Because Tesla is a great example. It has very liquid shares. So you own 100 shares of Tesla at 50 a share. You want to collect premium, so you sell a call. You're going to get cash immediately for that. So let's say you get $2 a share. You'll get that $200 up front, and you can go ahead and use that cash for whatever you want. You can hold it. You can put it into another stock. It's yours immediately. So there's two possible outcomes when you sell the stock. You can either keep the premium and your shares if it doesn't go above where you sold the call at. So let's say you sold the 55 per share strike and it's 50. So if it goes to anything over 55, then you're going to have to give away your shares at 55, but you still get to keep the premium. But if it stays under 55 and you had your shares at 50, you get to still keep the premium as well. And you keep your shares as well. But if it does go over 55 a share, your calls will be called away. So you'll sell everything at 55 a share and you'll keep the profit 200. So you'll get the gain on the stocks from 50 to 55, which will be 500. Plus you'll get the $200 in premium, which equals 700. So you're still winning. The only downside to this is if the stock did run to, I don't know, 60, 70, you're leaving some potential profit on the table because you would make a bigger stock gain on that. So that is the only downside if it runs off a catalyst or some surprise news. So this will basically let you generate income while holding stock shares that you don't mind owning anyway. It'll slowly reduce your downside risk because as you're gaining premium, you can put that into safer stocks or what have you, whatever you feel like. And it works well for stocks you already own and are okay selling. So you can say, okay, like if I had my shares of Tesla at 430, 100 shares, I'm fine selling them at 500. So you can also sell that call a week out, you can sell it 2 weeks out, you can sell a month out, you can even sell leaps, which is going to be over a year out. So let me show you how this looks visually so you can kind of conceptualize it a little bit more and understand it. All right, so we're going to go over to option strat. I really like this tool. It's free, super easy to use, and it shows you a nice conceptualization of what I'm talking about here. So we're going to go to cover calls. Again, this is 100. We have 100 shares of Tesla. It's at 433. So we dropped $43,030 on this, just to conceptualize it, right? So let's say we want to sell a week out, right? So we're going to sell on December 20th, expirations in 7 days. And that's 100 shares at $433, right? So that's actually going to net us $3,000, which is pretty insane. So we can go ahead and take 3,288 and divide that by 43. Let's do 4300, 43,300. And we'll go ahead and see. That's actually a 7.5% return, right? 7.5% return in 1 week, which is pretty insane. For this individual stock Tesla, the reason why it's so high is because it's ran so much lately that the implied volatility is super high. Implied volatility is basically a metric. Here you can see it. And that basically is how much it's gone up and down in like the short term, mostly a short term metric. Long term it can be affected too, but for stocks that are very up and down or maybe uncertain, they're heavily shorted, all these things will raise the implied volatility. I don't want to get too into the weeds with that because this is just a simple sort of like conceptualized video. I want to show you guys one more thing though. If we look at the SPY, for instance, the implied volatility is going to go from 60 at Tesla all the way down to 7.9% because this is the S&P 500. It's a very safe ETF. So we're going to look at 100 shares at 604. That's going to be $60,400, and that's actually only going to net you a week out $588, right? So we can go ahead and take the calculator again. 588 divided by 6,400, so 60,400, and that's going to be like under 1%. So you could really see when we're not afraid to like risk things on things like Tesla that can move up and down a lot, you can actually get insane returns with this strategy, especially if you're selling at the money, right? The closer you sell to at the money here, the higher gains you're going to get. But if you're like, oh, I think it's going to go to 610, so I want to sell it a little higher, you will get a little less profit, but the odds of your shares are being a little bit more in your favor. So this is going to be my first video on this, covered calls. I hope you guys like this. This strategy is super powerful, and I'll definitely be going into a little bit more depth. I just wanted to get this one out here. So everyone that's checking out my channel has something that they can learn and gain from this. I'm trying to provide value. Let me know if there's any other option strategies you guys want to have me go over. I'm definitely going to go into other ones such as the wheel strategy, cash secured puts, maybe do a little video on naked calls, naked puts, both buying and selling. But like I said, I just wanted to show the one thing, covered call here. I don't want to get too into the weeds. Put comments down below if you have any questions. I'd love the feedback. I'll answer you guys and definitely update this video a little bit later down the road. Have a great day. Niconomics out. Good luck in the market, everyone.